Welcome to the video. In this video, I want to be showing you a very powerful strategy that you can use to catch retracement and continuity in the volatility index market. So if you look carefully on my chart, this is the volatility 100 and this is the 1 hour time frame. So I want you to pay close attention to every information and details I'll be giving in this video, because that will guarantee your winning after you watch this video, and then you need to practice at the end of this video. So if you look carefully on my chart, I have MACD, I have the stochastic oscillator, and I have a moving average on my chart. So first I'll be explaining how the strategy works, then after that I'll be showing you settings to this indicator that you see over here. So what do you want to look for? The zone level is number one thing I want you to pay attention to. So for your zone level, let's say this is the innermost zone, you want to zoom in 2 times or 3 times. 1, 2, 3. So this is the best zoom level for this strategy. So what are you looking for? So first thing you want to do is to go to your daily time frame or the 4-hour time frame and determine trend of the market. Either it is moving in a downtrend or it is moving in an uptrend. So you go to the daily time frame, and as you can see over here, you can see that for some time now the volatility 100 market has been bearish from this point. So if I mark that area out just like you see over here, after we have this break, so let's say we confirm the bearishness around this point. Over here you have confirmed that a low, a high that did not take out this high, then another low, another high, then another low. So this is confirming to you that market is now going in a downtrend. So once you have that, then you go to your 1 hour time frame. Let's go to that point. So this is it over here, 1 hour time frame. This is where we marked on the daily time frame. So you want to be looking for markets to push into the 80 level. So I want you to be paying attention more to the 80 level, because this one will help you to maximize your win rate. But you can also scalp the retracement if you want. Maybe after you have it enters into this 20 level, you can go to the 15 minutes time frame and decide to buy a bit to the upside. But here I would advise you to just stick to that 80 level. Then you have a retracement to the upside, pushes into this 80 level around this point and touching the moving average. So here I want you to be waiting for when this blue and this red enters to the 80 level. But you can see at this point we only have this red enters, this blue did not enter, so we will not take this trade. So let's continue. So this is a very nice one. You can see how the two of them enters into the 80 level. So the reason why I said you should wait for both to enter is because you can have this, then another movement to the upside that take out this high. But this movement now is pushing these two indicators into the 80 level. So you can see you have the drop, retracement, enters into the 80 level. Immediately you have that, you want to wait for when there is a push below this moving average. You can see this long push to the downside. You can enter your sell. Stop loss can be above here, then you can leave your trade for a long period of time. So you can see the market come, consolidate, then pushes this indicator again into this level. After you have this consolidation, what you want to see is the fall to the downside, because the higher time frame is aligning that we are going down. So you can see over here, then we have the push to the downside, and you have another retracement to the upside, pushing into the 80 level. So you can see once you have this push below this level, you can enter your sell. Your stop loss will be above this high. Consider then we have this retracement, did not take out this high, then we have this push to the downside. You can see all the way from this level, and if we continue, retracement to the upside but did not enter into this 80 level, then you can see long retracement enters into the 80 level around this point. So over here, if we zoom back, consider you're likely to be in a drawdown around this point. So you can decide to close your trade around this point once it enters into the 20 level, but you can also take a loss. It depends, but because we know that once we have this entry into this 80 level again, you want to see a massive drop to the downside. You can see there's drop, entire sell, retracement, did not take out this high, another drop. So you want to see it fall massively. You can see our market continues to fall to the downside up to this level. and the same thing will be done over again. So hope you understand what I'm saying. So everything you see here that I have showed you is reversed for the bull market. So you want to be looking for the 20 level to buy your trades to the upside. So let's go to it. So this is volatility 75. You can see if you go to the daily time frame, you can see that this is not yet enough information to buy or sell to the downside, because here we have sell condition, and you can see this long retracement. So we go to the 4-hour time frame and see how it is acting over there. You can see that we have a break, trace, break, retrace. Then you can go to your 1-hour time frame again. So this is the long movement to the upside. So what do you want to see? You want to see it retrace into the 20 level, push above this moving average, stop loss below here. The market rallies to the upside, take this high and still give us some profit more. So what I want you to pay attention to is your higher time frame. That is the most important thing. The entry is not really a big problem, but you need to understand where is the direction of the market, where is the market going. Then you will be able to now take in the move and make some money from it. Now let me quickly show you settings to my indicator. Click on this indicator icon over here. You can see that I have just 4 indicators: moving average, stochastic oscillator, MACD, and another moving average. To select the first moving average, click on the F icon on the main chart and search for your moving average. Make the period to be 35, shift to be 0, method to be exponential, apply to close. For the style, color of your choice, 4P0. After that, you click on save. The next indicator is the stochastic oscillator. To select that, click on this F icon on the main chart and search for your stochastic oscillator. Make everything to be 1P0, make this to be low, high, method to be simple. And for the style, make it color of your background. If your background is black, make it black, and if yours is white, you make it white. The main thing we need here are the levels. Click on this pen icon, make it 20 and 80, color of your choice, 2P0. After that, you click on save. The next indicator is MACD. Select that, click on the F icon on the indicators Windows 1 and search for your MACD. Make the fast EMA to be 12, slow EMA to be 26, MACD SMA to be 9. Apply to close. For the style, main style to be color of your choice, signal style, make it color blue and make it 4P0. After that, you click on save. And for the last indicator, which is another moving average, click on the F icon on the indicators Windows 1 and search for your moving average. Make the period to be 1, shift to be 0, method to be simple. Apply to previous indicators data. This is also very important. For the style, color of your choice, 4P0. After that, you click on save. So that is basically the settings to this indicator. If you follow it correctly, your chart will look exactly as what you see over here. So after this, I want you to go back on your chart, backtest this strategy, test it for yourself and see how it works. If you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on the notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.